June 6th, 2025. Today we started off the day with, I'm obviously recording this video a little bit early. I am done for the day. But today we started off with a really strong 3-bar micro channel, bars 1 through 3. I don't trade before bar 7 for reasons like this. Again, according to Al, Ali, Brad, whoever you follow, the likelihood of a breakout failing is much higher before bar 7. So I don't take trades before bar 7. However, with that being said, just remember what this 3-bar micro channel looks like. Go make a slide on it. This is a really strong micro channel. This is a very, just the 3 bars, again, not before bar 7, but had these 3 bars occurred somewhere over here, somewhere anywhere else in the chart, that's the kind of 3-bar micro channel that's one of the higher probability ones. So, really strong bars closing somewhat near their highs. There's some tails, but not a lot of tails. They have a micro gap. So that's a really strong 3-bar micro channel in general. Again, I did not take it because it was before bar 7, but that's kind of what you should be looking for in, the strongest, best case 3-bar micro channel. Bar 5, so a reversal attempt down, but not that good. And you can see Bears got a second leg, bar 7. They got leg 3, 9, and 10, and then they got a climactic leg 4 on 12 and 13. It's a breakout below a bear channel line. You can draw it like that. You can draw it like that. It doesn't really matter how you draw it as long as you can see that bar 12 is trying to break out below the bear channel. When you get a breakout attempt below a bear channel, in general, there's only about a 25% chance of success. So it's not really that good to be selling this low. It's probably better to wait. 1 through 4 is likely to get some sort of attempt at another leg up as well, although it did not reach its symmetrical second leg target. 14, a good bull bar closing near its high. It breaks out above 13, but 13 is a bad buy signal bar, so you should expect us to test the bar 13 high before bouncing. So 14, 15, a large tail on the top. Had 15 looked like 14, there's an increased chance this gap stays open and we get a couple legs up into this area. However, 15 having a large tail is trading range price action, so odds are we should test the 13 high. We get a second leg up, 18 and 19, a large tail on 19. Not really all that great. Ideally, bulls want a really strong bar here, and they obviously do not get it. 21, it's low 2, low 3, however you want to look at it. And you can see we get a surprise down on bar 22. 22 is strong enough that you're going to get a second leg from 21 and 22. I think it's a new breakout. We broke out below the bar 1 low pretty strongly. You can see we do get a symmetrical second leg. Ends up being a little bit bigger. But 21 and 22 are strong enough that we're going to go below the 22 low at some point today. Probably below the 23 low at some point today is what I should have said. So when you get 21 through 23, a lot of traders want to buy above 23. That looks like something that, Al would mark as a buy. And it's totally fine to buy above that. But you also have to understand what it is you're doing. You're buying a reversal that's most likely going to be minor. And it did exactly what minor reversals do. It led to 3 legs up, and it gave you twice your actual risk if you bought above 23. You can see 2 times the actual risk led basically to the high tick of 33. It's not really a coincidence that we reversed there. It's because you got 2 times the actual risk. And traders who bought above 23 know that 21 and 22 is ultimately the dominant feature of the day as of now. So while we should go a little bit higher, odds are we're going to reverse back down. You also have to keep in mind that if we weren't going to reverse back down, let's say that 21 and 22 was not going to get a second leg, 24 would probably look like bar 2. So 24 would be a giant bull bar, and then 25 would probably also be another giant bull bar. When you get follow through like 24, 23 and 24 will probably get a second leg, but you have to keep in mind you're buying a minor reversal and you should expect a couple legs up and should be getting out below 34. Can't, and that's the thing is if you got out below 34, you made like a point, and that's what makes it kind of difficult. So, really good traders would probably get out with twice their actual risk somewhere up here. I did not buy 23, 24, obviously. I bought 29 and I scaled in 3 times during 30, scaled in, and then got my symmetrical second leg and I got out. It was a little bit below the high tick of 29. We should go at least a tick above 29, 2 legs up, should get a third. And then we do get, as I said, we do get the third leg up. I did not take 33 because it was a late leg. I didn't think it was that good. 36, it's not the strongest looking micro channel, but I thought that 21 and 22, again, I thought we would get a tick below 23. It was ultimately my premise. And I sold and scaled in, and then I got my symmetrical second leg during bar 38. I haven't started doing this yet, but I know, I'm going to exit if I get a breakout and follow through against me. So it would probably have been okay to just hold the trade and try to go for this low. And if I get a reversal and follow through against me, or a breakout and follow through against me, and get out. But essentially, I could have made, triple what I made on the trade. And it's not, the situation would make sense in this context because this is still needing a larger second leg. So we have leg one here. And this whole thing is going to need another leg down. So it would make sense to take the sell and look to get below this low. But for now, I'm just trying to keep it as simple as possible in trading and catching the symmetrical second leg. 38, 39, this is one leg, pull back. The leg counting was pretty easy today. Second leg, pull back, third leg down. So even though it's a micro channel, there's a couple legs within it, and a reversal up on 42. You can buy above 42. The only issue with 42 is that you have a 6-bar micro channel, 1, 2, 3, 4, 5, 6. But you're buying in a bear channel, and you're buying the bottom of a bear channel, which is where you want to buy. If you're buying higher up, you're buying towards the top of the bear channel, which in this case is fine. It'll probably convert into a trading range, but you just have to be aware of that. So buying above 42 is fine. I would probably personally use a wider stop. I would, it didn't go below, but I would probably use a stop, a measured move down of 42 had I bought above 42, just because of the 6-bar micro channel. So you could buy half your position size on the close of 42 or above 42, and then be ready to buy more below 42, or you can wait and add that position on 46 when the trade becomes higher probability. So yes, it's less fun to buy up here than it is to buy down here and buy the exact low, but by the time you get bar 46, it's very high probability that you're going to get another leg up. So your risk is a little bit more and your reward's a little bit less, but your probability is higher. So if I were to take 42, there's nothing wrong with buying above 42 and sticking a stop below 42, but you're going to get stopped out sometimes and then it's going to reverse up. So you need to have the ability to buy again if you're going to do that, just because of the 6-bar micro channel. So if you take the buy, I would use a wider stop and then be willing to buy more. If you do put a stop below there, you have to be willing to buy again if it reverses back up. 45, 46, 47 was a strong 3-bar micro channel. I did buy. It did not fill my scaling on 48, so I ended up getting out at my symmetrical second leg, which was reached in this area during 55. I did not add on 51. It's okay to add on 51. I considered it, but it's towards the top of the bear channel, and we're getting a channel line break, which is fine. I just didn't know if we were going to test back down. So I just really didn't want to add on 51. 54, 55, 56, 3-bar micro channel. Good for the bulls, but pretty high up. You're buying leg 4, right? 1, pull back 2, pull back 3, pull back 4. You can buy leg 4. You just have to kind of be aware of the possible downfalls of that. So I did not buy the close of leg 4. I instead waited for 59. And then when we got 59, I bought one tick below 59. The reason I bought a tick below 59 was because if 60 closed strong, then it's a reversal and follow through against me. And I just need to get out of the trade. So in late legs, when you get breakouts against you, you should just get out at the market or below the bar. And so I bought below 59, thinking that worst case scenario, 60 would be a decently big bar and I'd get out somewhere down here. Although it would have surprised me if it was. Best case scenario, I get the symmetrical second leg. So I thought it was a reasonable trade. 60 closed stronger than I would have liked. It is a 6-bar micro channel, 7-bar micro channel. So still might go a little higher, but 60 closed stronger than I would have liked. So I put in order to exit below 60, and obviously 61, it never filled. The actual technical target would be the symmetrical second leg, which would be up here. However, I thought that 20 was a really important magnet, simply because the bulls who bought all the way up as it was rallying probably did a reasonable thing, looking for the symmetrical second leg here. So I thought we would rescue the bulls who bought all the way up to the bar 20 high. So I exited at the bar 20 high during bar 61, and my entry was the 59 low. So I got really good, essentially risk reward buying that low. My initial stop was way down here, but I wasn't going to let it get hit. If you took that trade and you did not exit during this, then you probably got to get out on the close of 63 or wait for 64 and get out on the close of 64. 64 is a 3-bar micro channel and it's leg 1 in a trading range, reasonable to short, and you would have gotten filled on 69. So that would have just gotten you out. but it's very possible that we sell off a little bit back towards, the low of this leg, the 54 low, towards the end of the day, as it is right now. It's also the end of the week, so I don't have the. Let me remove this. Just turn on extended hours. I like to look with extended hours for weekly charts, etc. But it's also the end of the week, possibly 4 legs up, but we have a micro channel from April, so we haven't traded below a prior week's low since April. Good for the bulls. Again, bull bar, but does this look like a bull trend to you, or what does it look like? 1 pullback, 2 pullback, 3. So it could be 3 legs up. Again, we're going to start a trading range at some point. This looks like bull channel behavior, not bull trend behavior. And channels predominantly evolve into trading ranges. And then the monthly chart, again, not really all that relevant yet. I would be very surprised if we do not test the April high. I don't know if we do it this month, but I'd be very surprised if we did not test the April high. This is a pretty big sell-off, and pretty big sell-offs usually get second legs or get tested or something along those lines, So we should get some sort of second leg attempt, and we should at least test the April high. But I'm not sure as to when that'll happen. We may have to go to a new high first. I did not initially think we would get to a new high, but this is obviously a large and disappointing fail. I initially thought we would get the second leg first. All right, that is going to be it for today.